What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm diving into a company that has been trending today, a big red day, and we're going to see if this is a buying opportunity or if this is just the beginning of the perfect storm. Name of the company, Roblox Corporation, ticker symbol RBLX, listed here on the New York Stock Exchange. As we can see, company down roughly 15.75% today, pulling back about 5 1/4, sitting here at $27.91 a share. Let's dive into it. We're looking at, well, first of all, this is an American video game developer, right? I'm not big on Roblox. I know, younger kids are into it, and that's fine. I think, I don't know, you guys can correct me in the comments if you wish, but I think it's maybe kind of falls into that Minecraft realm, right? You make a 3D world, you bring your friends in, you mess around, you run around. Listen, that's fine. I could totally see the appeal of it. However, stock's been taking a hit, right? So let's really see what's going on. We have a 52-week low of 21.65, so we're kind of near the bottom of the range here. 52-week high, 108.78. That is a serious range, and that's laughable, honestly. We're looking at a market cap of roughly $16.75 billion. The company is not making money. We come down here, first of all, annually, this is phenomenal, right? You're going back 2018, $300 million. Last year, almost $2 billion. That is phenomenal growth. Just over, 3 or 4 years? Outstanding. Problem? They haven't taken profits since any of this has been going on. And this is what throws me for a loop, right? You can't tell me a company rises from $300 million to $2 billion in revenue and they're still not making money, right? Look at this. So they bring in $900 million, negative $250 million. Then they more than double it, and look at the net income. More than doubled. Down. Oh no, it was less than a double. My apologies. Less than a double. Okay, so if you give them an extra $1 billion, then the negative net income and losses slow slightly. So what that tells me is this company needs to make $5-7 billion before they're net income positive for the year. I mean, that's embarrassing. That's embarrassing. I don't know. I'm not really going to dive into the company too much to really look at all their expenses and everything like that, because at the end of the day, we're talking about a video game developer, right? And if you've really been around for that long to where your popularity is growing, now you're $1 billion plus in revenue, and your company gets publicly listed and traded, right? After all these years, you should be positive. Look at this, founded 2004. And again, I'm not knocking the company, the game, whatever the heck is going on, the 3D environments. It really doesn't matter. I don't know about you guys, but if I was running the company, we'd probably be making money by now. And I don't care how I'd have to do it. So we're sitting here again, $27.91, market cap $16.75 billion. Last year revenue, $1.9 billion, right? So the company's trading over 8 times total revenue, and they're not making any profits. So that ratio can be brought down drastically, in my opinion. This company should be trading 1.5, 2 times revenue. That's being generous, right? 2 times revenue, that'll be what? Market cap of $4 billion. That's a 75% drop from where we are now. So that's what? That's $7 a share, right? So in my opinion, this is a $7 stock. Okay, and even if you switch over here quarterly, you can see, they're bouncing around. They're maintaining that almost $600 million in the quarter. Phenomenal. However, look, even when revenue jumps up, net income drops even more. This company has seriously been struggling. And, even if we switch over here to TradingView, this is basically when the company started trading right here, March of 2021. And if we look, right, miss on the earnings, which we know, right? We just looked at the numbers, so they're probably never going to beat here on the EPS side, going back a year and a half, 2 years of earnings reports. But we're sitting here, good beat on the revenue side here, right? Soon as they started trading, first earnings report, boom, they bring in $79 million more than estimates. Phenomenal, right? Next quarter, up, now we miss, top and bottom lines. Next quarter, up, now we slightly beat, of course, miss on the EPS side, right? So they're 2 for 3 on the revenue side, right? Just keep that 0 for 3 on the EPS side. 2 for 4 on the revenue side, 0 for 4. 2 for 5, 0 for 5. 2 for 6, 0 for 6. Okay, 3 for 7, 0 for 7. Okay, so we have a company that has been publicly traded for roughly 2 years and has beaten earnings less than half of the time, never really seeing good increases to the EPS side, and obviously no profitability for the company after all this time, right? So those, in my opinion, are all red flags. We switch over here to stock charts. I throw on my Bollinger Bands. And as you can see, first of all, this is our 200-day moving average, right? Several months ago, what is a September moving average? $50+, now down to $38. Trust me, in my opinion, give it a couple of months, that's going to be $28. And then, $21. Watch. You watch. 50-day moving average, 36.56. Obviously, it's nowhere near that now, even though it was trying to rise back and break the Bollinger Bands back to the moving averages. But even if it did, it wouldn't be justified and it shouldn't be there to begin with, right? We have an RSI of 36.5 here on the daily. In my opinion, I think that's a value trap. Even if you see a bounce back tomorrow or Monday in the stock, I think it's just going to continue dropping to the downside. We have a MACD that looks like it's turning down and possibly crossing, which will accelerate the sell-off, if you will. Switch over here to the weekly. Again, RSI 38.5. Again, personally, I think that is a metric that is going to be used as a value trap. They're going to bring this down probably to low 30s or even sub 30, and then you might see some volume coming into the stock, but it shouldn't go in my opinion. This company, again, seriously needs to sell off. And the fact, like I said, at 28, it's massively overvalued. The fact that this stock at one point was 120, 130 a share absolutely blows my mind. We got a MACD that looks like it just crossed and is going to continue to potentially pull back. We have a bottom Bollinger Band of 26.41, and the low today was 26.85. Excuse me, the low this week was 26.85. So, in my opinion, again, might bounce around in the short term, but will most likely continue to sell off and pull back into the low 20s, the high teens, and should continue selling off since then. Really not much to say. Like I said, remember, if you like the company or you like their product, if Roblox is a good game or a lot of people involved, that's fine. Again, I'm not knocking the company. The problem is, like I always say, these quote-unquote new companies, they've been around, 5, 10, 15 years. Then all of a sudden they go public. Revenues might increase, but how are you not making money? Quick little anecdote before I let you go. I remember back in the day we used to talk about Take-Two Interactive Software, ticker symbol TTWO on the NASDAQ. That was a video game development company. Well, I say was. I mean, they still are. But the point of the story was, company had a market cap of like a billion and change. They had negative EPS. Everybody was just waiting for them to break through and go net income positive. One of their divisions was Rockstar Games, which some of you may know. That's the company that develops Grand Theft Auto series. And it's like that was their flagship game, where Grand Theft Auto would bring in maybe like around $1 billion in sales, and the company was worth $1 billion because they kept taking all their money and reinvesting it into R&D, which is research and development, right, for future games to make better games. And yeah, people were just beating that stock up. It wasn't really moving, and then they started doing I remember like LA Noire. That was Take-Two Interactive. They just started coming out with I don't know how to say it, but more intricate games, more enjoyable games. I don't know what the exact adjective is right now, but at the end of the day, the reinvestment into R&D did pay off. The company ended up going net income positive, and obviously, if you pull up that chart now, I believe the stock's still over like $130, $150 a share or something like that. And and the anecdote I'm telling you, years ago, we're talking like, I don't even know, like 2014 or something maybe, like around that, 2013, 14, 15, like in that range. And then all of a sudden, the company like went net income positive, and the stock went from like $9, $10, $12 a share. Again, is Again, I don't know where it is now, but it was well over, like $140, $160 a share or something, right? So just think about that. If you can invest into a company, at the right time, basically with the confidence that they're going to go net income positive, it could really, really work out to your benefit. But the problem with a situation like Roblox is, in my opinion, this is not a buy at $27.91. If it pulls back again to like 10, sub 10, we're only trading like 2 times and change times yearly revenue, then it's worth rolling the dice, in my opinion, right? You invest into the company when it's massively discounted, when it had a huge sell-off, but it's still semi-relevant. You invest into the company, you wait for them to do some restructuring, reinvest into R&D, come out with, like a DLC for the game, or possibly develop a new game in the quote-unquote Roblox family. Boom, all of a sudden the stock goes net income positive. That's when you'll have a stock go from $7, $8, $10 a share and begin to rise to 22, 28, and get back to this level. And your returns now are 3, 4, 500+%, as opposed to breaking even after holding the stock for 3 years or 5 years. That's just my 2 cents. But I'm going to leave it there. Once again, this is Stocks Behind the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up, helps out the algorithm, blah, blah, blah. If you like the video I'm putting out, push the subscribe button. Obviously, it means a lot to me, seeing the community grow. And like I always say, moving forward, I understand markets are rocky, they're volatile, and they're uncertain. So I wish everyone success. I hope everyone makes a couple of dollars. And I'll see you guys in the next video. Thanks for stopping by.